pretty much what you need to do to make trading work in terms of risky markets. So that's when the market starts flying up and up and up and up, and you're short and you're saying, wow, what's going to happen here? What do I do? When does it stop? And things like that. Okay, that is always going to happen. It doesn't matter what you're trading. You cannot escape this. If you load up any chart, okay, anything, doesn't matter what it is, let's go for dollar yen, and you go on a higher time frame, you're always going to have really, really far moves, okay? And they need to be handled accordingly, because that is just another market scenario you'll see. You'll see markets that rally for ages. You'll see them that drop for ages. It's just how things go. But today I'm going to talk specifically about the pound New Zealand. And it's not actually the first time you've seen this happen. Okay, you had this rally up here, followed by this enormous fall where hopefully you got short. I'm sure you would have if you followed me. And the same thing there. This and that and that and this. And that was an extreme one. Okay, so clearly this happens every now and then. Now, if you're trading and you're pretending it won't happen to you, you are kidding yourself. You can't escape it. But it's not the end of the world. You can trade these things very well. You can make a lot of money doing it. You just need the right approach. And it just comes down to a little bit of psychology, but mathematics for me is mainly how I deal with it. For me, using mathematics is what my strength is, and it's a factual way of thinking. In other words, you don't need to rely on it falling tomorrow or going up high. It doesn't matter. As long as you stick within your boundaries, you can survive any move and you can make money from these moves. So how do you do that? Well, number one, you really need to manage your drawdown. And I'm going to put as well per asset. So that means specifically, if you're trading the pound New Zealand, you want to know, how far am I willing to take this? What is the maximum amount I'll be in holding loss on this asset before I say, okay, I'm not going to add anymore, I'm not going to short anymore. That's what you need. That's a set amount in line with your equity. You can't pick it at random. It needs to be like that because you're probably going to be trading other assets or other FX pairs or whatever it may be at the same time. So you need set drawdown for any pair, any time. That keeps you within the lines of what you want to be, and it stops you going over it, because the moment you over leverage and you trade too much, you start to get clearer margin call, and you'll start to panic. You'll stop sleeping at night, and it gets a bit vicious. Also, this is a key one. Lots of you guys know that my strategy is fast hedging, as it says on my website. And that basically means as the price rises, I take hedge gains to mitigate any loss. So if I've gone short previously, I might say to myself, okay, I'm going to hedge, and I'm going to hedge and just trade in the day and take those gains so that I can end up taking this trade off. Okay, and I'm out of that short without a loss, sometimes as well actually in profit. And I do that a lot of the time with old positions I leave on. Because the market swings back eventually. As I said, it happens time and time again. It comes down, it comes up. And with the pound New Zealand, it's been very predictable. Okay, and you're now moving into that short zone again. All right, so just bear in mind that eventually it will fall. It's going to fall at some point. That is the certainty that you have with any pair you're trading. It will fall at some point. Okay, now with this as well, you need DCA. And it needs to be relative. And when I say relative, it's the same as managing your drawdown per asset. The amount you're willing to DCA, how many times you're actually willing to enter the market before you say, okay, that's enough. I've had it. And the reason why you do all these things, okay, is for the simple reason of protecting your capital. And that is where the math comes into it. Because you will know at any time, okay, well, this has gone too far, and if this keeps going up, and I continue my behaviour of adding, I don't hedge, I don't manage my draw, I don't have a set size, how far can you take it? Can you survive up here? Because it will happen. Eventually, it's going to happen. And if that eventuality might be rare to you, there's nothing stopping it from happening tomorrow or today. Could happen. And if that means you are going to be closed out, you're not understanding the mathematical part of trading, which is knowing, okay, this is a limit for me. This is a limit. It's a bit like the debt. It's a bit like the debt ceiling. You know, that is going to be too far for your account to sustain. The price is going to get too high for you as a trader, and you know, you're going to get a margin call because you've over leveraged. So if you don't have these rules and you're not protecting your capital with pure math, you know, it's going to be an emotional journey for you. You're going to say, I could short and the price could fall and I could make money, or the price could keep going up and I could short and I could over leverage and I'll get margin called, and you'll find it really difficult. I will look at gold. There's a few guys in here. Don't forget to press the like, guys, and don't forget to go to willsebastian.com if you want to learn how to trade today. As I say, it's free, and there's a free webinar for you to learn from. So yeah, it's all mathematical. You do not want to go crazy. You just want to trade alongside reality. Can you last this move or not? And you would be scaling in short now. Okay, that's my plan. And I am short several times with DCA rules. Gold, someone just asked for. That wasn't the purpose of this stream, but gold, I'm going to take it short in a second. Probably nearer here. Well, I say a second. If you can push up nearer about $10, $5 or $10, I would like it short. I would do it lightly. If you're risk averse, it's going to be up here near $2,000. S&P, you've got employment news soon, by the way, if you didn't know that already. S&P, I called it long yesterday. You can go and check my profile for that. I called it long. You should be out for gains. Exit if you had that long. You could lightly reshort up here, but I much prefer 4280 for shorts. So that's up there, if you get there. But the main lesson, as I said, I mean, you've got it across several pairs. You've got it on pound ord, okay, which I'm short on as well. You've got it on Euro New Zealand. Can you survive this move? Could you survive if the price gets up there? If the answer is no, stop trading. You need risk management rules in that case. Any any asset goes up, anything I'm trading, it doesn't affect me. I know how to deal with it. I'm ready for it. Okay, you have to be ready for moves like this. If you're not, go under here. Okay, it's the only way you can change. Hedge, if you're trying to guess hedge, or you're trying to guess DCA and guess your maximum drawdown, you know, you're just taking a punt in the dark. It's not going to work, in other words, because you just won't have a set size at any time that is in line with reality. You'll just trade an enormous size, which is completely non-relative to the situation. All right? Now, for pound New Zealand specifically, I prefer higher time frames because they give you the wider view of the market. This is an extreme move, and the reason why it's extreme is because you've got your sixth candle becoming green now. Now, you can't see many other times where there's 6 candles in a row that are green. I don't actually think that has happened. No, I don't think that's happened for years. Years and years and years. All right? 1, 2, 3, 4, 5, 6 candles up. So you definitely shouldn't be buying. It's too late for that. 6 green candles in a row. Would you buy? Really? Really? No, I hope not. Minor PA there. You can only see that on a higher time frame. That's why we use them. So just remember, we're scaling in short because if the market comes up here, which it very may well, if you can't deal with that, then you shouldn't be trading. You will lose your money. Okay? Don't do it. You need risk management rules like my Academy members have. So just bear that in mind. Hey Philip, we're focusing a lot on pound New Zealand, which you asked me about. So make sure you watch this carefully because you'll know what I'm talking about. You just need to be careful and use all those rules I just mentioned, guys, at any time. That's what you do in a rallying market when it comes up and up and up and up and up and up and up, and it looks like it will never end. You slow down, you manage your risk, you don't overload, go mad throwing in money at that trade. Stop doing it, all right? Make your position size small, don't over leverage, space your positions out, and you'll be okay. So just a short one for the New York session, guys. Normally I do the London. Very short one. If you want to get on board for free, willsebastian.com, go over there. I'll probably do a longer live stream soonish. I've got a lot of stuff of my own to do. As I say, I'm taking in Academy members. Just go underneath. Thanks for watching, guys. Hope that helps. See you soon.